Hello guys, welcome back to the channel. In today's video, I'm going to be talking to you about healthcare stocks, which have about a 10% weighting in my ISA portfolio. I'm going to be talking about healthcare as an industry, why there's four key aspects as to why I'm most interested in healthcare. And I'm going to come on to quickly talk about the fund and effectively the role that the healthcare fund plays in my portfolio. So yeah, before we get into things, I do want to make it clear that this is not financial advice. The standard YouTube disclaimer does apply. This video is for education and entertainment purposes only. Please do your own research. And with that said, let's come on to the core of the video. So like I said, there are four key reasons why I hold healthcare in my portfolio and why I think they're a good investment for the long term. The first is aging populations and sort of the demographic trends that are going on in the Western world. The second is the weight loss revolution that's happening at the moment, the weight loss drug industry and how much growth I think that has. The third is the government lobbying and how effectively healthcare companies own the government, so can generate pretty substantial profits over the long term. And then the fourth is the use of AI in drug development, trials, and effectively developing new medicines. So like I said, we're going to go through those one by one and then finally touch on the sort of investment characteristics of healthcare and the role that plays in my portfolio and potentially your portfolio. So the first theme is aging population and the demographics of the Western world, which is obviously where most healthcare money is spent because the people have more money to spend. I think we all know that populations are aging across America, all of Europe pretty much, apart from the migration figures that sort of change that statistic slightly, but the domestic population is aging significantly. We've had our population boom and now people are getting to 60s, 70s, 80s where they'll spend more on healthcare, and naturally that should be a tailwind for healthcare companies. So I think I know I've got it written down here, the estimated spend on healthcare is expected to be $10 trillion by 2030. So these healthcare companies are really not going anywhere and they do have that long runway of growth to take advantage of that aging population. The second is the weight loss drug boom. So you'll see when we come on to TrustNet that the biggest holding in the fund is Eli Lilly, and Novo Nordisk is also in the top 10. These two companies effectively have a duopoly on weight loss drugs. They are the only two companies at the moment that can really administer these on a global basis, and even then there's a huge supply shortage. So I think at the moment the market penetration of weight loss drugs is somewhere in the region of 5 to 8% of its maximum potential, and over the next 10 or so years the market size is effectively meant to increase by 10 times. So it's a massive growth area and it's something to be really interested in, and it's, like I said, it's the biggest holding in the fund that I hold. So it's quite a big factor, quite a big component, and it's something to be aware of and quite excited about if you're a healthcare investor. Thirdly, and perhaps a controversial one, is the lobbying, particularly in the US. Like it or not, the big pharma companies pretty much own the government, or at least their arm of the government. They can get away with more than they should be able to, and you can argue whether or not that's good for the population of America. I would argue probably not. But as investors, if you want to sort of maximise your return, it makes sense to go where the profits are. And thanks to the lobbying that the pharma companies do on the US government in particular, they can make some pretty big profits and get some things done that maybe shouldn't be done. So, depending on your morals and so on, you can question whether or not that's a valid basis for investment. But for me, it's another, I was going to say tick in the box, but that sounds a bit bad, but it's another tick in the box in terms of an investment idea and why perhaps it's a one for the future, let's say. And particularly with Trump coming in, they are having a review of certain medicine pricing as part of the Inflation Reduction Act that Biden passed, that Trump's effectively reviewing. But we all know that Trump's for big business and he doesn't really care about much else other than himself and the corporate profits of America, really. So yeah, that's one to consider, and it's a valid reason, in my opinion, for being bullish on healthcare stocks. The final one is AI. So when you think of AI, you probably think of Nvidia, Microsoft, all the tech stuff. But actually AI is being integrated in a lot of different industries, healthcare being one of them. In all of these drug trials, I don't know exactly how it works, I'm not a scientist, but say you're doing DNA sequencing, you've got to change different components of the DNA and see how that impacts the final outcome, let's say that's how they do it. With AI, you can run these simulations and it effectively speeds up the process. AI can run thousands of different simulations and see effectively what happens. So Again, I'm not a scientist, I'm not an expert, but I know that AI is being integrated into these healthcare companies and loads of other companies, but healthcare is quite a good one, and it should make things far more efficient and hopefully boost profits for years to come. So those were the 4 reasons as to why I invest in healthcare, or at least the investment reasons. We're now going to come onto the charts and talk about the role that healthcare plays in a portfolio and the fund that I use in my own investments. So you should be able to see on screen, I've got TrustNetUp, my favourite website, and we'll start off with the performance. Now I don't have the Investment Association Global Sector on here, but I think what you can note from the performance is particularly this blue line, which is the fund itself, which actually I should probably mention first. It's a passive fund. I think in healthcare, you can justify passive more than many others because generally the larger players are hard to disrupt. You know, like I said, they lobby the government, they have all this R&D spending. Really, you know, the larger players have been doing it for 50 plus years. I think Novo Nordisk has been going for since the 1800s. So yeah, the big guns are kind of where I want to be in pharma. I don't want to be in biotech or trying to pick moonshot companies. It's just stick to the big ones. And it's also cheaper, obviously, being in a passive. So we've got the passive index on there. And again, it's not as steady as I did my last video on insurance, so it's fresh in the mind. It's not a really steady performance profile, but compared to the global sector or something like tech, it's very steady. And that's because the revenues and the cash flows that you see in healthcare are quite business cycle intensive. So again, going back to the tailwinds we spoke about, people are getting more elderly, like populations are getting more elderly. People are typically getting fatter, and if anything, in recessions they get more fat because they buy more fast food and more processed food and more cheap food. So the weight loss drug side, the elderly side is going to power through regardless, and then obviously you've got the US lobbying, so that sort of fact that plays across recession or not. So you've got those steady cash flows, and that's really why I hold it in the portfolio. I've got some risky stuff, so the small caps, the tech, the concentrated BlackRock fund, and then I've got the more defensive stuff, so insurance, healthcare, and then the UK stocks that I haven't yet done a video on, but I'm coming on to soon. So anyway, all that to say, the performance profile over the 5-year period is quite steady, and that's why it's in the portfolio. Scrolling down to the ratios, I mean, there's not much to see here. You can't really analyse it because it's an index. It just does what it says on the tin. It buys the healthcare companies by market cap weighting. We'll buy the biggest ones in the largest weighting, as you'll see when we come onto the top 10, and that's that. So we'll continue to scroll down here. Unit information, you can see the OCF, or the annual fund charge that you pay as an investor, is 0.31%. So it's not, you know, floor prices of a US index or a global index where it might be sub 0.1%. It's just really relatively cheap fund and a good way to get exposure to healthcare stocks. And then the fund size there, £1.1 billion, not really relevant. I mean, these companies are huge. That will have no impact on market prices whatsoever. There's no problem with that whatsoever. Finally, then we come down to the fund breakdown itself. So we've got asset class by region on the left, then we've got the top holdings, of course, on the right. First thing to note is the US equities take up 70%, and although that might seem a bit much, it's pretty standard in any sort of globally benchmarked fund, whether it be passive or active. As I've said in previous videos, the US equity market is the deepest, broadest, most liquid, and I think by market cap it is about 70% of the global index, so it's actually quite in line with what you'd come to expect. Not really much else that I'd particularly point out there. And then we come to the top holdings. So a lot of these you may have heard of or should have heard of. Johnson & Johnson's a big one. Other ones that maybe would be typically known would be United Health. Eli Lilly and Novo Nordisk we spoke about earlier. They've got the duopoly on weight loss drugs. You know, Eli Lilly, the reason it's so high is because it's the US focused version of the weight loss drugs. Novo Nordisk is actually based in Denmark. So yeah, you can see there 4.2% in Denmark equities on the left. Yeah, Eli Lilly and Novo Nordisk are the only ones that really spring to mind for me. They're the ones that particularly excite me amongst this group. The others are just pretty, sort of, like I said, very large, very established, should pump out the numbers. Unless they do something very dramatically wrong, they won't go out of business. So yeah, that's the fund. Absolutely whizzed through that, but I wanted to just get this video out, talk through every fund that I've got in my portfolio, and then we can get onto more fun stuff like market updates or stock specific stories or anything else you guys want to see. So thanks for watching, leave a like and subscribe if you enjoyed, and I'll see you in the next video.